Hey everybody, and welcome back to my channel. In this video, I'm going to share with you a trade recap of a trade that I took where I won 3 times my initial risk on the trade, banking just over $183 in my account with the 5%ers. This trade was taken on EURUSD and it was utilizing concepts that I've been learning from my mentorship with the Inner Circle Trader, ICT. Keep watching because in a moment I'm going to jump onto the charts and share with you a complete trade breakdown explaining my process of why I took this trade. But before I do that, make sure that you are subscribed to the channel below and let's go. Okay guys, so here I am in my platform in MetaTrader 5 with the 5%ers, and the day that I'm recording this is the 18th of January. So I took this trade yesterday, the 17th. I actually took a couple of trades yesterday, so I took a losing trade on pound yen, but it didn't matter so much because I had a positive profit loss ratio, meaning that I made more in my trade on the euro, which put me up a profit on the day. And if you're not familiar with the 5%ers, the 5%ers are a prop firm that I trade with, whereby I trade their capital and we split the profits 50-50. And they actually have lots of amazing features. They have an incredible growth platform. If you're considering a prop firm for yourself, I definitely recommend looking into the 5%ers because they give you realistic targets and they give you plenty of time to carry out the challenge, 6 months, which is a lot more than other prop firms. So I've got a link to them below in the description if you want to check those out. But let's have a look at the chart for EURUSD and see how exactly I managed to make $183 on this trade. Okay, so I've loaded up EURUSD here on the 4-hourly time frame on my charting platform here on TradingView. And the first thing I was doing for EURUSD is I was watching the larger time frame, the 4-hourly, because that's what I use to calculate the basis of my trade, the larger time frame. And what I was interested in here, just observing some basic price action, is that price had been consolidating, it dipped down here, grabbed liquidity and broke this previous high. So it has been in an uptrend. It kind of grinded a bit here. We had this massive push up, but then it kind of started to struggle to break higher. It's been consolidating for some time. And I was really interested in this area of price action because it looked like we were making a potential double top pattern before price would drop down. See, what I found was interesting about the euro was if we go up even further in time now to the weekly time frame. Last week closed really strong bullish. And I was expecting to have kind of a dip down for price to grab liquidity before continuing that bullish trend up. So I'm going to just mark that weekly level here. And going back to the 4-hourly time frame, you can see that that weekly close was where we were making this double top pattern. I thought that price was quite likely that it would retest this high. If it failed, I thought there'd be a chance that it would basically drop down and come back to this level here, which is where we got this big push up initially, because there'd be loads of liquidity sitting there, there'd be loads of orders, loads of stops for people who've gone long, and maybe new buy orders as well. So it's an area that the market is naturally going to want to return to grab that liquidity to keep the market moving. So that was my game plan, if you like. From there, I dropped down to the 15-minute, and once I had a general idea of what I was looking for the trade, I wanted to see where was a good place to get in. So this is that same pattern on the 4-hourly, the double top pattern. We have the push up here, it came down, and we had another push up here. There was just a lot more candlesticks because we're on the 15-minute time frame. And what I thought was interesting is we had loads of points where price was trying to push higher and failed. We eventually got a move higher here, but as you can see, we had a really sharp push down. And this is another interesting area because again, we've got this consolidation here, price pushed up, it grabbed the liquidity of the orders that were sitting above this point, and then it came back down, which further added some clarification to my trade plan to go short. So I thought that there must be a chance that price will return to this area here to be able to grab more liquidity before dropping lower, and that's where I looked for an entry for my short. So zooming in on this area here on the 15-minute, and I basically had a look at where we had the largest candles of momentum. So we had a pullback here, and then we had these big bearish candles down. And I marked these fair value gaps here. Now this is a concept I've been learning from my mentorship with ICT. And I don't want to really explain the theory of them because I'm not the original teacher. I've learned this from Michael from ICT. So if you want to learn in depth what this is, I recommend you check out his YouTube channel because it's all amazing content and it's free. The theory behind this is basically 3 candles in a row where the middle candle blasts through and the first and the third candle don't have a chance to actually touch. So you're marking the gap in between those candlesticks. So that's a fair value gap there. I thought that was the best one because it was the biggest candle and it was near this pullback. So I was interested if price returned to this level of getting in for a short. Now here we are on a Tuesday, and as you can see, price pushed up to this level. We got a big wick rejection and we got a sell-off. Once I saw this pattern, I then set up my sell limit order. So I set a sell limit basically in the middle of this fair value gap. I was looking for another retest of this area to get short. I set my stop at 20 pips, which was basically at the high here, because I thought that it was unlikely that price would come all the way up to retest this high because we'd had this big drop. And if it came up that far, I didn't really trust it anymore. So that was where my stop was placed. And for this, I used a 3R target because, as I said before on that 4-hourly, if we just go back to the 4-hour time frame, I thought there was a good chance that price may return to the scene of the crime, if you like, where this large bullish candle made its appearance at this level. So actually, I was considering a 4R target to really return to this level, but I didn't want to push it because it was so bullish on the larger time scale, so I thought let's stick with 3 for now. So I set my entry, I set my stop, I set my target in my platform with the 5%ers, and I left the trade to do its thing. I went out with my son and I enjoyed the really hot weather we've got in the UK at the moment.
Oh my god! Wow!
And as you can see, price pushed up and it actually got quite close to my stop. Now in hindsight, it's so good to look back on trades that you've taken because this is so much to learn. And what I learned from this is that I missed a better entry position. So if you have a look up here, a little bit higher up, there's actually a higher fair value gap. I don't know if you can see it. This level here from this first bearish candle from the highs, if we miss the next candle and then look for the top of the wick of the other candle, so we've got 1, 2, 3, and my orange box here is basically highlighting the gap in between the third and the third candle, because the second just blasts through that and closes below. That is a fair value gap right there near the high, and as you can see, price just came and touched that, but then we've got this massive wick rejection. So, this is why trading takes time to really master, because there's so much to learn. Once you actually learn what you're doing, you want to improve it and get better. And in this case, for me to improve it and get better, I could have set an entry in that fair value gap. And that would have been a much higher entry, which means I could have had a tighter stop, I could have had a larger target, and ultimately I could have made more profit. But as it stands, I didn't do those things yet. So I was in this trade, triggered in, and at the moment I was in quite a bit of drawdown. But that's what a stop is there for. And if we just continue this on, we've got a really nice bearish candle coming in here with the New York volume. And as you can see, later on that day, price just continued to drop towards my target. If I just zoom out a bit here, that original large bullish candle on the 4-hour time frame is this area over here. And just fast forward in time on, you can see that price does actually come and tap that area. But at that point, I was already out of the trade and I was really happy with my profits. I got 3 times what I was risking, so I was up about 1% on my account, which worked out around about $180. So I managed to finish green, and I managed to also gain some really valuable lessons, which is just as important. Needless to say, I am really enjoying the mentorship program with ICT. I am still right at the beginning of this mentorship. I'm currently on the Market Maker Primer course, which is a free course on YouTube. Once again, I encourage you to check it out if you're interested in finding out more. But there are so many lessons in this, so I'm just really excited of what's to come, and I'm enjoying incorporating some of the concepts into my trading and seeing the results play out for themselves. But how's your trading going for you? Let me know in the comments below. I'm really keen to see if you're undergoing some ICT training yourself. It'd be really good to hear about your experience. Meanwhile, if you've enjoyed the video, please be sure to hit that like button and don't forget to subscribe to the channel below. And I'll catch you in my next video. Thanks for watching.